Hello and welcome to Martin Lucas Investor. My name is Sensei, and you're watching the Morning Forecast Show. Thank you, everyone, for tuning in. This is the day after the FOMC announcement. This is a day that more war escalation is going on, and the markets are potentially entering what we've been saying for the last few months, which is a significant downtrend, a pullback, something over 10%, potentially a bear market where we reach the 20% mark. We will see, but it certainly looks like we're heading that way, and it certainly looks like we were right about that. So let's continue with the show. Bank of England is about to announce their rate decision. We're going to go over yesterday's rate decision. Lots of stories to go through. And again, we're giving, let me put the time on the screen, 7 minutes until Bank of England give their rate decision. Then, oh, I don't know what's going on there. Why do I have a line? I apologize. Give me a second. There we go. That's fixed. Um, 7 minutes until the Bank of England give their rate decision. So we're going to be covering that, and then their press conference will be after, and we will be covering that as well. So if you have just tuned in, take a second to hit the like button. While all of this is going on, we are releasing our chart course next week on Wednesday. The Discord integration will probably be happening this weekend for the Substack, the newsletter Substack subscribers. You'll be joining the community on Discord. So a lot going on, and then the Discord community will be getting some perks and benefits as well. So it's all coming together very nicely. And by next Wednesday, you'll get the chart trading course. Right now, 3 people. It sold out yesterday. It sold out the day before, and I think we're doing it for basically a week. And on Wednesday, the day of the launch, the 50% offer it will be over. First link in the description. It's also in the live chat, and there you go. You can get it. And you would have got the cheat sheet from yesterday, the deep dives from today, the stories from today. Lots of top stories here. Fed pauses on inflation fears, oil surges after energy strikes. Japan holds rates despite the risks. Micron sales triple on AI. Nvidia resumes China chip sales, and war halts UK rate cuts. That's what we're expecting. Global stagflation derails the pivot. A violent escalation in Middle East hostilities have derailed the global transition towards lower interest rates, with Brent crude reaching $119 after strikes on energy infrastructure. Central banks in the US, Japan, and Britain are maintaining restrictive policies to combat renewed inflation. The shock forces a conflict between price stability and supporting cooler labour markets or stagnant growth. Remember, in the UK, we actually have a worse issue because we're not getting any growth either. So if we're not getting growth, inflation's high, and then we've got, at least in the US, GDP's still, I mean, it's not brilliant, but it's still good. In the UK, GDP is close to zero. And if you've got stagnant growth, labor market cooling off, and then inflation going up. That is, I know Jerome Powell didn't like to use the phrase yesterday. He said stagflation we were reserved for times like the 1970s, 80s. But that's the word we use for those things coming together. Yes, it's not extreme stagflation, but we are at risk of stagflation. Markets are now easing previously anticipated rate cuts for 2026. So anyone who's here going rate cuts are going to come. New Fed chair is going to come and we're going to get rate cuts. That's not how it works. We're not looking at getting many rate cuts. Best case scenario, we might get 2. Worst case scenario, we might get 2 rate hikes. It's basically 50-50 now, whether we get rate hikes or rate cuts. Slightly in favor of cuts. This shift replaces the soft landing narrative with a period of geopolitical stagflation. Investors must now prepare for a regime where energy supply dictates monetary policy despite economic fragility. We've also got the stock market now in extreme fear. We like to keep an eye on the fear and greed, but stock market entering extreme fear. So there might be opportunities presenting themselves. The Bank of Japan kept interest rates at 0.75%. I anticipate they will be raising them in April. He did talk about the oil shock as well. We've got some winners, but a lot of losers, especially the mining industry being hit today. We will be looking at doing some purchases in the mining industry today. So what happened yesterday? Well, the Fed holds rates, but Powell says don't count on that cut. What we will do is actually come back to those stories. We've got 3 minutes before the rate decision. We are expecting a hold, although it's sort of it could still be a cut. We were very much pricing in a cut if the Bank of England just a few weeks ago before the war started. It was almost certain we were going to get a cut from the Bank of England. But now we're expecting to get a hold. So it'll be interesting. If we get a cut, that'll be a rally in the markets, but that's not really expected anymore. If we go over to our deep dive today, we are talking about the Bank of England. So let's scroll into here. The Bank of England decides today, here's why the war changed everything. 3 weeks ago, a cut was heading in one direction. Markets had priced a 50, now markets have priced a 50-50 chance of a Bank of England lowering rates today. And the MPC itself, the Monetary Policy Committee itself, has tipped its hand in February, writing that on the basis of current evidence, the bank rate is likely to be reduced further. They actually said that in their statement, and maybe that was a bit too soon. And they said, on the basis of current evidence, bank rate is likely to be reduced further. That language from the committee itself pushed expectations even higher. Everyone was expecting a cut here in the UK. But then Operation Epic Fury began. Oil went from $73 to $120. The Strait of Hormuz shut, and the probability of a cut collapsed near to zero. The Bank of England announces its decision at 12 p.m. GMT today. That is in 2 minutes' time. The overwhelming expectation is a hold at 3.75%, but the decision itself is not really the story. The story is what the MPC says about what comes next, and whether whether the committee that was split 5-4 just weeks ago is now united or still divided. We will see. I'll see if I can get the documents up as well from the Monetary Policy Committee, and then their press conference starts in about half an hour. So we will. Let me just get this ready. We will switch to the conference in about half an hour. And this is where the UK economy stands. So we know where that stands. We're just waiting for the decision now. We're going to bring up the decision over here. 2 minutes away. So what we're going to get is also the monetary policy summary, the minutes, and then let's see how many people voted for a cut and voted for a hike, and if it's unchanged. We'll get all of that information right over here. So it'll be interesting if it's a 54-5 or if they're a bit more united after the war shocks. If you have just tuned in, we're waiting for the rate decision from Bank of England, then their press conference. Please do hit the like button. It takes 1 second, and it really helps a lot. So take that. So no carry trade, right, Sensei? No, not at the moment, Sean June. We're not expecting a carry trade. Again, that's not the base case. Most likely it's a slow unwind, in my opinion. That's what I've always said. But we also said yesterday they're not going to cut. They're not going to raise rates today. It's looking like April, and that's when you might have a bit more of an issue. The carry trade, a big carry trade unwind would be when it's an emergency hike or a random hike, not at an event and not expected, and that might be in April. So hit the like button, subscribe if you haven't done so already. Check out the newsletter, 50% off. Let's see what we're getting over here. Oof. So that doesn't look right, what they've done here. Oh yeah, no one voted for a rate hike. No one voted for a rate cut. It's a unanimous decision of rates being being held steady. So rates have not been cut, and no one voted for a rate cut. We can see what's going on there. Let's go to Bloomberg. Let's see if they've got some thoughts for us.
Today, the FOMC decided to leave our policy rate unchanged.
They decided to just basically completely ignore the Middle Eastern shock that we're facing here.
They're basically saying all of this going on in the Middle East is a speed bump.
I'm not really taking the SEP or the dots very seriously.
There's not a huge amount of forecast accuracy here.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Futures declining by 1/3% on the S&P, down by 0.5 on the Nasdaq, -0.75% on the Russell. The epicenter of disruption once again in the commodity market, pushing 120 overnight, very close on Brent, back down to 113, higher by 6%. Gas prices spiking, escalation.
Let me just mute that for a second. I really thought they would have covered this decision. I think they might cover it in just a second. So I'm going to mute that. I'm going to change the timer now to the press conference. So the press conference will be next, and the press conference will be, and I'll put the timer on the screen. It's in about half an hour. So there we go. Let's go back and let's see if they're covering it now.
Near 3.5% for the month of March. And this is a problem, not just for the UK, for the ECB as well.
You know, it's notable that this was actually a unanimous decision because usually there are dissents on the Bank of England. When you hear what the individual members have to say.
There is just a little bit of background sounds coming from Bloomberg, so I'll just pause that for a second. But yeah, they're now seeing Bank of England inflation at over 3% in February and 3.5% in March. So that's what the Bank of England is seeing, inflation heading back up, and this is the concern we're having all across the globe. Let's go back to Bloomberg.
Or even some sort of hike should this continue. Really kind of coming out with this idea that this is making them more hawkish, but not ready to act just yet. I'm curious to read into all of these decisions to figure out exactly how much they endorse the idea of a rate hike ahead.
This is the issue for so many central banks, particularly single mandate central banks like the ECB, like target the inflation rate. They're squeezed by.
So Bank of England has held interest rates at 3.75%. They're concerned about inflation. What I'm going to do is just see if we can get some coverage of this. Because we've got the monetary policy summary and I want to read into this. Minutes of the Monetary Policy Committee meeting ended of 18th of March, global economic and financial situations. Let me, here we go. I've got the document. So what I'm going to do is I'm going to get some of the headlines from this document. So bear with me. This should be quite quick. I can get some headlines for us, and then I can read them out from what the Bank of England have said.
They have an even worse situation given that they're a smaller economy and are very susceptible to these shocks. Right now, you are seeing the pound gain a little bit versus the dollar, and you are seeing about 50 basis points of rate hikes fully priced into the market for the Bank of England, as it does seem like the different members would have been dovish, would have come out with cuts had it not been for what we saw. They now have one fewer lever to pull to try to bolster this economy when they have to fight inflation, and frankly, this is going to be inflationary.
The sequencing is really off as well. You'll get this shock to inflation up front all at once, then the growth hit further down the road. And for the Federal Reserve, this is what George Goncalves of MUFG was talking about. The issue is that all shocks are initially inflationary before becoming contractionary. Going on to say, we anticipate the Fed will fall into the same trap as they did in 25 by pushing back remaining cuts into the second half. That's the problem with the sequencing.
Right now.
Yeah, this is causing issues all around the globe, and that's what we're talking about today. Every single central bank from this decision, and again, this is a decision that is now getting a lot of scrutiny from Donald Trump for this war. A lot of scrutiny now. A lot of people, even Marco Rubio himself, said that this is caused because Israel wants to attack, and if they attacked without us, then we would have been in jeopardy. So this war decision is causing a lot of problems. Firstly, Marco Rubio saying we're only entered this war because of Israel. Then we've got global markets now, and again, also was it Trump's own counter-terrorism head or something like that? He's come out yesterday and resigned, saying there was no threat from Iran. We've got their own evidence suggesting there was no imminent threat like what was cited for this war. So all of this is going on in the world for potentially, and the evidence suggesting that there was no imminent threat from Iran, and all of this economic derailing is caused by something that didn't need to happen, and that there was no threat. So this is going to cause a lot of problems. This war hasn't wrapped up as quick as people thought. It's actually escalated yesterday. This can cause rippling effects throughout the whole market. So let's go back to this. I've got some thoughts from, I've got the document here, so I'll read out some of the key points from the document as well. So bear with me. Let me bring up that over here, and we can go through the document of the Bank of England as well. Let's go back to Bloomberg for a second.
Go for even bigger targets.
Equity futures down by 0.5% on the S&P 500. Coming up this hour, Gagi Chowdhury of BlackRock as stocks wipe out weekly gains. Max Layton of Citi expecting oil prices to go even higher. Steve Rasciuto of Mizuho reacting to the latest jobs data. Here's a view on Wall Street this morning as investors weigh the Fed and Middle East conflict. Chowdhury of BlackRock writing.
Okay, yep, here's some headlines. So the Bank of England, so it was a unanimous hold. All 9 members, let me bring that here. So all 9 members voted to hold, including the 4 who voted for a cut in, and I'll see if I can bring the document on the screen. We're looking at this PDF over here. Yeah, so what we've got is all 9 members have voted to hold, including the 4 who voted for a cut in February. This is a much more hawkish outcome than the 5-4 split 6 weeks ago. The overall verdict is more hawkish than expected. The market expected a hold, but many expected the vote to remain split. A unanimous hold is a clear signal that the war has completely changed the committee's thinking. The doves folded. So the 3 most important things we can take away from this whole document would be, um, number 1, it was a unanimous. Every single dove flipped. Number 2, Catherine Mann said the word hike, and this is a quote directly from her. I see the balance between inflation and activity to have shifted away from considering a cut towards considering a longer hold or even a hike at some point to lean against inflation persistence. So this is actually the most hawkish statement we've had from any MPC member today. Mann has explicitly put a rate increase on the table. And remember, this was the Bank of England who was very much looking to just cut because they had the runway for that. And now they've got their CPI inflation forecast, which is much higher. The Bank of England's February report has inflation falling to 2.1% by Q2 of 2026. That is now dead. Here is the new estimates: 3.5% March CPI. Q2 was about 3%, is around 3%. It was 2.1%. And Q3 CPI could reach up to 3.5%. These are crazy numbers, by the way. We're looking at going from 2.1% to 3%. Those are the estimates changing based off this war in that was started. Many say started by Israel, and the US had to get involved and didn't want to get involved. We actually had reports yesterday. If we go over to our own newsletter, if we had reports yesterday that big attack, which Trump wasn't actually happy about, that Israel did on the largest gas facility in the world, we've got reports that Trump has said, "Don't do that again," because that is when the global economy and all his allied nations will not be happy. No sound. Someone's just said no sound. Can everyone hear me? No, you guys can hear me, right? Let me know yes or no in the chat. Yes or no. Can you hear me in the Ganda has said no sound. Can someone verify? Can you hear me? Yes or no? Oh look, yes. Now yes. Now yes. What do you mean now yes? Um all good. Sound is fine. Okay, brilliant. So let's go to the newsletter and just recap what is going on, because this is really not great world. This is not a good state of the world, to be honest. It really couldn't be worse. So yesterday, the FOMC. Let's recap on that and see what's going on, because now we're getting a sense of all the central banks and what their thoughts are on what's going on. So the Federal Reserve, we covered their event. We're going to cover Bank of England conference in 20 minutes as well. I will get verification on that. I think Martyn might be covering it. Let me just ask. Will you cover? So the Federal Reserve held interest rates at 3.5% to 3.75% last night in an 11-1 vote. Remember, Fed Waller, we all love Fed Waller. He loved cuts. He loves crypto. He was a dove. He might have been that he was in line to potentially be the next Fed governor. Of course, he's not anymore. But he, the Fed chair, but he's not anymore. He actually flipped. Even him, even someone who's wanted rate cuts and agrees with Trump, he flipped and said, "No, we can't have rate cuts in this environment." And only Governor Stephen Miran dissenting in favor of a cut. The updated dot plot, and again, I sent out a newsletter to all premium members yesterday. I hope you got it. It was a very short, concise understanding of what happened in the FOMC. I showed you the dot plot in that as well. And that maps where each member expects rates to go. Kept the median, and the median is, imagine all these dots, and then you get rid of the dots, and you can find the average that way. It's not the mean average. The mean average is take all the dots, add them together, and divide it by the amount of dots. The median is a bit better way of looking at it, because you get rid of anything that's extreme. So imagine all these dots, and this is 3% interest, 4% interest. All those dots everyone put in, the middle one. The median was kept at 3.4% for year end, implying one 25 basis point cut in 2026. That's what we're expecting, or what the Fed is expecting. Although everyone is showing skepticism to that. The market has not priced that in anymore. The market, the Fed Watch Tool is saying no rate cuts this year. And again, I don't think the Federal Reserve took into consideration the PPI report we got that morning. And I don't think the Fed took into consideration the escalation we saw the morning of the FOMC. And if the FOMC was 1 week later, I imagine the participants would have said no cuts. But the range narrowed significantly, so that the range of estimates for the dot plot narrowed from 2.1 to 3.9% in December. So that was the range of what everyone thought, but now it's between 2.6 and 3.6. So essentially, we're saying less rate cuts either way, with 4 of the 5 members shifting from 2 rate cuts to 1. And that's actually quite a big deal, because if you were projecting 2 rate cuts, you would have potentially been saying, actually, I'm saying 2 rate cuts because there might be 3. But now, if you've moved your estimate from 2 rate cuts to 1 rate cut, you're essentially saying it could be as little as no rate cuts. So you're essentially, these members could be essentially saying, I once thought there could be 3 rate cuts, probably 2, but now I'm thinking there's no rate cuts, maybe 1. So that's a 3 rate cut difference, and that's quite significant in the market. The summary of economic projections, which we covered on the show yesterday, raised the core PCE inflation forecast from 2.5% to 2.7%. I don't think that was after. I don't think they took into account the PPI of that morning, or the shock that morning. But that's still an increase in inflation. While GDP was upgraded from 2.3% to 2.4%, which is it's interesting, isn't it? The statement added a new line acknowledging the Iran conflict for the first time. The implications of developments in the Middle East for the US economy are uncertain. And I think that's the justification they're using to not cause a panic, because very easily you could say the implications or developments for the Middle East, for the US economy, are not good, or are inflationary, or will slow down growth. That's all pretty much confirmed, but they didn't want to say that, because if they did say that, the markets would crash. I think they want to ease us into what's actually going to happen. So the real action came during Jerome Powell's press conference. He said the Fed cannot look through the oil shock until tariff-related inflation clears first. And remember this, when Jerome Powell spoke, he obviously had his statement, but he's lived through the day. And earlier in that day, we got terrible inflation, and we got a big escalation. So all the statements and dot plots were from the day before, where we didn't have that inflation spike, and we didn't have the oil. So this is actually a bit more true to what was going on the day. And he said the Fed cannot look through the oil shock until tariff-related inflation clears first, calling it a precondition that has not been met yet. He's essentially saying if the tariff inflation stays, we're going to continue to be concerned about the oil inflation. If tariff inflation goes, then we can look at oil inflation and say, actually, that's going to be something we don't need to focus on too much, and we can look through it, because that's what they've been doing with tariffs. But if you start layering tariff inflation and putting onto oil inflation, then you can't just ignore both. You can't just ignore it like we have been for the last year. Everyone's saying tariffs are just transitory. It's going to be a one-time hit. We'll look through it. Well, if you've got another one-time hit on top of that, you can't just keep saying it's a one-time hit and it doesn't matter. And that's what Jerome Powell said. He revealed that the Fed staff estimates show effectively zero net private sector job creation over the past 6 months after adjusting for overcounting, and described the labor market balancing as creating a feel of downside risk. Also suggesting there that there's no jobs being created either, literally zero in the private sector. He confirmed that rate hikes were discussed at this meeting and the previous one, though the vast majority do not see hikes as their base case. Market sold off as he spoke. The S&P 500 closed down about 1.5%, now around 9. That was the Dow Jones is around 9%. I apologize for that. The CME Fed Watch, so I think the S&P 500 is about 5% down, and the Dow Jones is about 9% down. That's just a little bit of a typo from this morning. Let me see what we're down on the The S&P 500 is down about 6%. The Dow Jones is down nearly 10%. The CME Fed watch traders moved to price zero cuts for 2026, despite the dot plot showing one. Governor Christopher Waller, who dissented for a cut in January, flipped to a hold, leaving Mirren as a sole dovish voice. Powell described the tension between the two goals, but would not say stagflation. He didn't like the term, remember? Yesterday's PPI um, Yesterday's PPI at double consensus, oil above $100, and tariff inflation still working through the system makes that tension worse, not better. Watch the February core PCE on March the 28th. That's the number that decides whether one cut in the dot plot survives or dies. We're going to look forward to that PCE report on the March the 28th, the first inflation report that will include the oil spike. And now here's the second biggest story. And you guys can get this in the newsletter. Even if you don't want to become a paid member, you can get some of these stories for free as well. I'll put the link in the live chat anyway. You can use that link and go sign up for free. Or I recommend there's 3 people can get it right now for 50% off. And then there will be a price increase on Thursday next week. And there will no longer be this discount. Oil hit $120 as Iran and Israel trade strikes on energy infrastructure. And this was big news yesterday. This was a certain escalation yesterday. Brent crude surged as high as $119 a barrel overnight after Iran and Israel exchanged strikes on major energy facilities across the Middle East. Israel hit Iran's South Pars gas field, the world's largest natural gas reserve, in what marked the first direct attack on Iran's upstream energy infrastructure since the war began on February the 28th. Iran retaliated by firing at Qatar's Ras Laffan industrial city, home to the world's largest liquefied natural gas export plant, causing what Qatar Energy called extensive damage. Iran also struck 2 oil refineries in Kuwait and targeted facilities in Saudi Arabia and the UAE. European natural gas futures surged as much as 35%, more than double their pre-war level. US gasoline prices since reached the highest since October 2022, reaching nearly $4 a gallon. The attacks mark a dangerous escalation. Qatar has already halted LNG production on March the 2nd after an earlier Iranian drone strike, taking roughly a fifth of global LNG supply offline. Analysts at Global Risk Management warned Qatar's gas output could be offline for months, and in the worst case, for years. Saudi Aramco briefly halted crude loadings in its Red Sea port of Yanbu, its only remaining export route, with the Strait of Hormuz still effectively closed. Wasn't that supposed to be opened a couple weeks ago? Brent has now rallied roughly 60% since the eve of the war, while the US benchmark West Texas Intermediate WTI has been lagging behind, trading at its widest discount to Brent in 11 years. Trump attempted to de-escalate, warning that the US would massively blow up Iran's South Pars field if Qatar's LNG facilities were hit again. But Tehran continued strafing Gulf targets through the night. Brent and WTI are both oil benchmarks, but Brent sets the price for Europe. If anyone was wondering why we keep referencing Brent and WTI, Brent is basically for Europe and Asia. WTI is for the US market. They have diverged the widest gap in 11 years because Gulf supply disruptions hit Brent directly while the US has its own production cushion. That means Europe and Asia are absorbing a far worse shock than American consumers. Which is the Europe and Asia didn't want this war, but they get to feel it much worse. Meanwhile, Trump publicly distanced himself from Israel's attack. He publicly distanced himself from Israel's strike on South Pars, saying the US knew nothing and was in no way, shape, or form involved. Watch whether that friction changes the pace of escalation. Will miners will support that energy. I'm just looking at some of the comments coming in. There comes a time ahead that we never saw before. Yeah, this is unprecedented. I mean, there's crazy things going on. I'm just checking something very quickly. Bear with me. Oh, we just got a new subscriber. So this is just crazy. I mean, it's getting worse. It's not getting better. There's rumors of boots on the ground. Donald Trump said he spoke to a former president, and they supported what he was doing. They said they should have done that, but then I don't think President Trump realized there's not that many living former presidents, and he said in that when he was asked that it wasn't Bush or it wasn't someone, and then there's only Biden, Obama, or one other president, and all of them have said they haven't said it. So it's all going on, and people are losing confidence in the US and their allies, US's allies, are really not happy with what this is causing damage to the global economy. And I'm sure we're going to hear more about it in the Bank of England conference. Then we've got Japan. Jerome Powell, very unhappy. He's not really showing how unhappy he is. We saw one slight reference to that, but we're seeing what it means for the US citizens and the inflation there. We've just seen the Bank of England um, talking about the prolonged disruption to oil supplies and how much it's going to affect inflation here in the UK. Now let's talk about the Bank of Japan. And then also the ECB is going to be reporting later. The Bank of Japan holds at 0.75%, but warns oil shock could fuel inflation. The Bank of Japan held its benchmark rate at 0.75% this morning in an 8-1 vote, with hawkish board member Takata again pushing for a rate hike to 1%, the same proposal he made in January. So nothing really changed there. The hold was unanimous. The hold was unanimous among expectations, but the tone was noticeably more cautious, and it's all about the tone. The Bank of Japan formally added the Middle East conflict to its list of economic risks for the first time, warning that risks to the outlook included the future course of the situation in the Middle East, as well as developments in crude oil prices. Governor Kazu Udia went further in his press conference, noting that Japanese companies are already actively pushing up prices and wages, which means that it could pass on costs more aggressively than after the war in Ukraine. The Nikkei 225 fell as much as 3% on session as oil surged past $115. How are the markets looking? Because none of this is good news, to be honest. I expect the markets might just start panicking today. Be careful out there. I think the markets might start panicking today, and form new lows. Look, S&P 500 is now down. It wasn't down today. It was actually up on the futures, but now we're looking, it's down. And if it breaks these levels, it can drop. The S&P 500 by the end of the day could be down another percent, but essentially 2%. And that could be very easily happen. And that's when we hit our first target. The Nasdaq down 0.45%, XRP down nearly 1% again. It hit our resistance and it didn't manage to break through at 157. Oil down slightly today, but it's not even about is it down, is it up? If it's staying at these levels, it's not good. Gold is breaking down and silver breaking down. Here is some opportunity right now. Let's see if we can. I think there might be an opportunity to buy some silver here. Excuse me. Let me see the portfolio. Oh, that's just an alert's gone off. What's that for? We've just got an alert. One of our alerts just went off for one of our stocks. Something's breaking down. Let's have a look. ICOP. ICOP is just at support. Okay, we're gonna make some buys today. We've got one of our copper indexes suggesting a buy right now, and silver just down 9% now. Potentially a bounce there. Gold as well, down 4.5%. Here we go. Yeah, it's starting, guys. It's starting. When gold and silver go down, as well as the market, that's when you know it's all over the place. The shock is everywhere, and it's affecting all markets. And here we go. The S&P 500 now making the lows of its day, as we're reporting these real concerning stories. So Japan roughly imports 95% of its crude oil, and every $10 rise in Brent costs the country an additional 2 trillion yen. So every time, and this is A war not started by Japan, but affecting the Japanese citizens and the global economy because obviously the carry trade. Um, every $10 we go up on Brent oil, it's costing them $13 billion per year in additional energy imports. That makes current oil shock an acute problem for both inflation and the trade balance. The yen has weakened to near $159 against 159 against the dollar, approaching the 160 level, where the Bank of Japan and Ministry of Finance have previously intervened, including spending $100 billion defending the currency in late 2024. ANZ expects a rate hike as soon as April, as do I, and ING has flagged that if yen breaks through 160, the timeline could be pulled forward from October to the second quarter. That makes for the global markets. Sorry, that matters for the global markets because a surprise Bank of Japan rate hike at these levels triggers a carry trade unwind, where investors who borrowed cheap yen to fund positions in higher yielding assets are forced to sell. The August 2024 carry trade unwind, triggered by the Bank of Japan's last surprise move, sent shockwaves throughout the global equities. So we're now a couple minutes away from Bank of England coming out on their speech. So let's get prepared for that. We've got Micron, who beat on earnings, I think, and their stock is down this morning. Nvidia story there, but let's get onto the Bank of England story. Let me put up a poll. Like this is, I mean, we're living through a crazy time right now. There's going to be a lot of inquiries into why this war was even started, especially now that it's causing effects for every single country around the world. So, are you in support of the war? I just want to see what the sentiment is out there, especially now we're seeing all the major effects to consumers around the world and the evidence coming out suggesting there was no imminent threat, and Trump's own team resigning because of this. Are you in support of the war now? Because I know some people were at the beginning. I know a lot of people's minds have changed. Are you in support of the war now? Yes, no. Now you wait. I'm gonna put now you have seen effects. And obviously, if you've always liked it or not liked it, you can still vote as well. Are you in support of the war now that you've seen effects? Let me know. The poll is up. Let's go over to Bank of Japan for their speech. We've got it lined up here, I believe. Let me refresh it. Oh, doesn't seem like they're covering it right now. Why are they not covering it? Normally on their YouTube channel, so bear with me. I mean, we can go to Sky News. They probably have it as well. Bloomberg. Give me a second. Maybe the time zone has changed. Let me just see. Let me see if I can find it. Bear with me 1 second. Let me see if we can get this. Bank of England press conference. Oh, here we go. Is this it? No. I don't think they're live yet with it. Bear with me. I have put the poll up. The Nutella says Israel made it happen. Well, yeah, that's what Marco Rubio said, but unfortunately, I think he retracted his statement after that because that wasn't very popular. Just waiting to see if we will get this stream up. Is Bloomberg? Probably Bloomberg will cover it. Let me just refresh the Bank of England's YouTube channel.
Right now, where you look at where Oman and Dubai crude is, I'm not talking about Brent oil, $110. We're talking about $150, $160, $170 a barrel. So basically paying the regime on the same time the Israelis are decimating them. It's a little confusing.
Hey, Max, it's always good to get you on the phone and catch up with you in real time.
This would be a reversal of their own
have in their arsenal, given the fact that, yeah, you can do unilateral SPR releases. Sure, you can unsanction oil. That isn't going to unclog the Strait of Hormuz, and it's not going to solve the ultimate problem.
If they decide to unsanction Iranian oil, this would be a reversal of their own maximum pressure campaign that Trump has spoken about in Trump 1, and he went ahead and put the policy on the table, as well as in Trump 2. And the regime would be getting oil profit, petrodollars, at a much higher price right now, where you look at where Oman and Dubai crude is. I'm not talking about Brent oil, $110. We're talking about $150, $160, $170 a barrel. So basically paying the regime while at the same time the Israelis are decimating them. It's a little confusing.
Hey, Max, it's always good to get you on the phone and catch up with you in real time off the back of this breaking news. Thanks for making time for us. Max Layton there of Citi, breaking down his views on this oil market. I've got some good news, some better news, and this is the difference between the United States and the UK right now. In the UK, squeezed by energy, at the same time as the labour market is weak and a central bank is on pause, worried about anchoring inflation expectations, and two-year yields are absolutely surging. In the US, the good news, the labour market, jobless claims at 205. Initial jobless claims, Bramo, that is good news.
Yeah, and this is really highlights the data we've been getting significantly from the United States, which is the economy is still okay and people are still able to spend. I am really interested to see how much the U.S. market is moving in response to the U.K. and how much the ECB expectation is moving in tandem with what we saw from the Bank of England. What you're seeing right now, no rate cuts until October 2027 in the United States. And then once they start cutting rates, they're going to cut rates quickly. And that gives you a sense of just how much growth could get curtailed. So, yes, things look fine now. But the longer that the Fed remains on hold and the longer that oil prices really cannibalize from people's spending power.
Oh, okay. I apologize. This is not one of the meetings where we get a live press conference. That happens. I got it a bit wrong today. So we don't actually get the press conference today. The next one will be in April. So that's why we're not seeing the stream. We've just got the report, so we can go through the report again. But let's go back to Bloomberg. I have got a poll running. Let me answer some of your questions, because a lot of people are not happy and some people are happy. Let's see. I mean, everyone's entitled to their opinion, and we welcome everyone onto the channel as long as everyone is respectful. The Nutella said, let me just change this. I'm gonna switch back to the Bank of England rate decision because we're not actually having a conference. So there we go. Let me go over to live chat and then I'll end the show. And then we will be getting a conference from the ECB and the EU rate conference in about less than an hour. And that's what Martyn will be covering. So that's what we're going to be covering shortly. Let me just see if we've got the link for that. Oh, wow, we've got I don't even know how many people watching the show. Thank you, everyone, for tuning in. There's just, there's a lot going on today. So if you have just tuned in, we've just covered the FOMC recap from yesterday, which was, we'll come back onto that, but essentially Jerome Powell there's best case scenario, one rate cut. That's what the dot plot is suggesting. The dot plot got a bit worse. Inflation is going to head up. But they didn't even have the data of the morning, which was a big hit on the largest gas facility in the US. In Iran by Israel, which the US wasn't in support of. And then right now we've got the Bank of England decision. The Bank of England decision was just a unanimous hold, which was severely more hawkish than expected. Then we've got the Bank of Japan, which was a 9-1 vote, and they've started to cite how big of an issue it is, this oil shock. Now we're going to have the ECB in less than half an hour. So stay with us. Let me go through some of the comments. I'll give you another my thoughts in a second. Again, next Wednesday, the chart training course, the indicator is going to be released. The Discord integration is coming this weekend. And you get access to the daily newsletter, the deep dives, the cheat sheets, the charts every single day, the £5,000 portfolio challenge. I'm going to make some purchases today, and we've been prepared for this crash, which seems to be unfolding as we speak. And copper is heading down as well. So I'm going to be making some buys later. I'll be sharing it on Substack. So if you haven't got it now, best time to get it. Only 3 people get it every single day. I'm going to put the link in the live chat. If you haven't got it yet, go and consider subscribing to it. Jacko, thank you for your super chat. Really appreciate it.
Adjiko Vallejo tipped $50 through super chat. Good day, Mr. Sensei. Cheers from Cancun. What's your take on gold dropping like a fly?
Thank you very much for your super chat. Firstly, um, what's my take on it? It was expected. In all seriousness, it was expected because we bought gold at 1,500, bought silver at $34, or many people did as well. And the trade suggested, okay, silver $120 beginning of this year. People called me crazy, and gold above $5,000 an ounce. We got both of that. Now it's a sell-off period, but you add that with the suggestion that there's not going to be rate cuts. Gold and silver love rate cuts because it makes them more attractive, but also the end of cycle. So it's volatility in the gold and silver space. Having said that, I think there's still opportunity there because nothing goes down in a straight line. And obviously, gold is a hedge against all of these issues as well, especially in a stagflationary environment. So I do think gold will recover, and I think gold could put in new all-time highs. I think silver could certainly have a bounce back up to maybe $100 or $90 an ounce. So I do think there is opportunity there, but again, I don't give financial advice, but it makes sense why they are correcting today. The Nutella said Israel made it happen. Songs of Say says, I support the effects the war is having on the market. Burst this bubble. Transfer wealth to young people, says Songs for Space. Don't support the war, but support the crash. Fair enough. Makes sense. The Nutella, how come both leaders died by bomb and yet still fighting? Why are we still fighting after leaders were killed? Because I guess I don't know. I mean, they replaced, what was it, Ayatollah Khamenei with Ayatollah Khamenei. That's what's happened so far. So yeah, again, guys, there is a poll right now. Give me your thoughts. What are we running right now? Are you in support of the war now? You've seen the effects. Yes says 49%. No says 50%. That's very different to when we initially did this poll. When the war started, I think 80%, 70% were in favor. No USA arrest on Epstein Island. $200 lady says Nutella, how can anyone support this war? Such losers, says easy peasy. We allow everyone on this channel as long as no one's going to be inciting violence or saying something really terrible. Someone can come here and say I don't like the Democrats, and someone can say I don't like Republicans. That's fine, or have difference of opinion. We like to discuss everything. So your comment is fine, but people have different views, and we respect everyone as long as people are being respectful. Let me just go over here and see Martyn's just put his link on. So there we go. That'll be starting 20 minutes. ECB live conference. That is going to be live, and that is going to be a live conference, which is going to be the final piece of the puzzle. Australia raised rates. The Federal Reserve, very cautious, and are expecting, the market's now expecting no rate cuts. I mean, that would, if you said that last year to people, that people called me and Martyn crazy last year when we said 1 to 2 rate cuts. They were like, no, there's going to be 5, 4. And even the market was pricing in 3, 4, 5. Remember when I showed you the charts? And now we said 1 rate cut, 1 to 2 rate, maximum 2 rate cuts, most likely 1 rate cut is what me and Martyn said. People called us crazy then. Imagine if you told them that there's not going to be no rate cuts and even rate hikes last year. The market would not like that at all. And here we are. Gold is dropping like a fly. Yeah, let's have a quick look at gold. Gold down 5%, silver down nearly 10%. There's going to be opportunity here. What's the market doing? Yeah, the S&P 500 down nearly 0.5% now. Metal should migrate into more risky. If you don't see the need for the fix in Iran, you're Islamic. What does that even mean? How is Islamic an insult? What is that even supposed to mean? You're using the word of people's religion as an insult. That's just like saying if you don't see the need for the fix in Iran, you're Christian, or you. It's just a weird. That's a weird thing to say, David Harris. We're not going to take any action yet because I don't actually know what you meant, because it just seems like a really weird, uneducated thing to say. Raymond Zapta says, all eyes on the dollar and the 10-year yield. Yes. Gold in a few hours has dropped over 400 USD. It's crazy, isn't it? Should we go out and buy some gold today? The Nutella, England depends on Russian oil and gas. No, not really anymore. Not as much as it used to. Sorry, guys, I lost where we were in the chat. US employment. This is it depends a lot on Middle Eastern gas, actually. This is the big banks look like what they're doing with gold, trying to stop crypto. Matt Grimes says we need term limits and no phones if you're a congressperson while in session. Worst time to start investing, says gaming. I think it's a good time to start investing. You guys, if as me and Martin always say, if you want to make money, you want the market to go down until maybe a few years before you retire, so that you can buy at low levels and the markets can go up. This is opportunity, and in the portfolio challenge, we're going to be ramping it up over the next few weeks. We're going to get the chart training course out, maybe make a few buys today. But I think the market's going to continue its downtrend, and we're going to make some purchases in the portfolio challenge in the newsletter. So if you haven't got the newsletter, there is a link, 50% off. And again, you get all the perks and benefits. All good, bro, says Raymond. Ticker BMDOI. We still have allies, says Evista. This is bad for the long run, says the Nutella. Hi, everyone. Markets are dropping quickly. Good day, Mr. Sensei. Thank you, Jacko. Big supporter of the channel. Really appreciate it. My take on gold is, as mentioned earlier, I think we can go lower. It can get more volatile, but again, long-term gold is going to be great, so I don't mind buying it. Worst case, I just hold it long-term and brilliant. Over time, it will go up, and inflation is going to be a problem. I mean, the US debt is horrific, as it is with a lot of the other places in the world, and that's going to cause inflation and debasement of currency. And whether you believe in Bitcoin or gold, I like them both, so I buy them both. So worst case scenario, I buy gold and have to hold it 10 years, and it will be great. Or worse, okay, thank you, Martin. Let me sorry, do that. Turn the interview on. Oh yeah. Or best case, I will buy. If I buy gold and there's a trade, I will trade it. So worst case, I buy it, I hold it, and the debasement of currency. In 10 years' time, we can make great money on gold. Or worst case, or best case, we can make a trade on it. I'm going to bring Martin into the show now. So let me go over to this screen here. We've got a special guest on the show. So let me go over to this spot here. Let me put that there and then add Martin on the screen. That's gold on the screen right now. And Martin, welcome to the Morning Forecast Show. Lovely to have you here.
Thank you very much, Sensei. Great to be here. Great show, great information. Lots of great stuff this morning from the newsletter. Cannot wait for our integration into Discord, the village, and the training course this week. It's fantastic. Everyone, you should get that training course now and the newsletter 50% off. Sensei gave you the link. Take advantage of that. You're going to love it because next week you'll be able to take part in the village and talk about it, share it, talk to Sensei live, talk to me live, all the live trades. It's going to be great, and put all the pieces together. The reason for calling in this morning is, surprisingly enough, I'm extremely bullish once again this morning. There's always a way to make money in the market, not by shorting it. Absolutely not. Never short the market. Don't do options. It's tough to make money. The hard part, well, in fact, it's easy to make money. The hard part is to keep it, because right now around the world, people are turning away from the stock market. They're selling. They're panicking. They're not even watching channels like us anymore. The numbers are down on Bloomberg, CNBC, Bank of England didn't even broadcast the event this morning. It's being dropped everywhere from the airwaves. This is the time when I buy. Now, I might not get the exact bottom today. I will eventually, because I'll keep buying it and I'll find the bottom. What I've just discovered this morning is, from what Sensei just said and what I've been reading and preparing for my show, is despite all these rate pauses, people and decisions wanted to cut. We wanted to cut. So what we're building up, we're building pent-up growth, pent-up good news. It's going to explode. However, for now, it's bad. We could have had rate cuts. We're not. We've got this war in Iran, which, in my opinion, not political, was completely pointless, unnecessary, not needed. There was no imminent threat from nuclear. Remember, a few weeks earlier, Trump said he got rid of all the nuclear threats. So I'm a bit confused why we even had this war. Nobody knows. People now in the Trump government are also agreeing and going, what the hell? What the hell was this for? But one thing Trump does very well, whether you agree with him or not, is create chaos. And chaos is great if you can hold your nerve. It's the way you make money. Is all this been about making money for Trump and a few insiders? Well, could be. So you've got to play the game, follow the money. So I looked at the numbers this morning, and the US economy is actually okay. The debt's getting a bit hilarious, ridiculous, but the actual economy, people working, spending, is good. That's because the American businesses, forget all the nonsense, are still good. So I'm buying. I'm buying more and more S&P today. I'm now no longer buying individual stocks because the S&P is now 20 times earnings forward. This is a go sign for me. When everybody sells out and freaks out and sells and panics and doesn't watch financial channels anymore, and everyone is tired and fed up and giving up, that is when I double down and double down. As you know, I've been borrowing money left, right, and center to buy this market, and I am. I don't need now to buy individual stocks. I am buying the broader index. That's where I said I wanted to be ultimately when it returned to 20 times earnings. You may remember in October, I said the market would go sideways. In March, would end up back where we were, and I was right. The right thing to do was take money, make money, buy Coca-Cola, make profit. Then I was able to build a portfolio so I could go outside and borrow more money against it. That's what I told you. I've now got 700 grand on the line. My portfolio is racing towards $1 million. I'm buying these dips. I'm not waiting for the bottom. I don't know when the bottom is going to come. I'm going to keep buying because all of a sudden, Trump will say, and it could happen this weekend, the war is over. He has won. Of course, he hasn't won toffee. Nothing has actually happened apart from blowing up a fuel oil fields. As Sensei reported this morning, we have discovered that where's my bloody mouse gone? There it is. Sorry. I'm trying to read information as I'm doing the same time. We have discovered now more people are saying that Trump was not happy about Israel, their attack on the Iranian oil and gas fields. So I think we're going to get a massive rally soon. I don't know when, but I just know I want to be in. So I'm buying more and more in the S&P 500. I don't need to buy single stocks now. Just keep loading everything up into that S&P as it keeps going. Why? Because the US economy, the US businesses are underlining, beating, and winning. We would have had rate cuts today. That would have fueled around the world. We're going to get one rate cut, but you know what? I'm not bothered about that. I don't care what the market does. I don't care what the traders do. I am buying value. So join me in about 10 minutes time for the EU rate decision. We already know what the decision is. It's another hold, but it's the tone. I want to hear how they deliver it, and how they deliver it will determine if I borrow some more money, even more money. There's always another way to get more capital and bring it in. I want to be in this market when it takes off. I'm not waiting. I'm not holding. I'm not scared. I understand the value, and that is how you make money. We did it on Liberation Day, I think, with $500,000. We're now doing it on whatever this was with $700,000. So could be at $1 million by the end of next year if I get this right. Will I get it right? Join me live and find out. Every single one of my trades is shared on Discord. They're now discussed in the village. Sensei will be discussing, I'm sure, giving his opinions. Sensei's holding back a little bit. And right now, he's going to get a better deal than me. If he bought today, he would get a better deal than me on everything that I own. Is he going to wait? Is he going to hold? Well, you can discuss and join us every day on Discord as we discuss Sensei's trades and thoughts and processes. Who's going to win? You know who wins. The one who wins is the one who is in the game. Sitting on the sidelines is great as long as you get in before it rallies. And remember, it could explode upwards, because if we get a decision at the weekend, the war is over, you can't get in the market. And then what happens? The market opens up. Sunday night, 7 p.m., you can want to be in all you like, but it'll open up 5-10%. That could happen. I don't want to be that person. Sensei doesn't want to be that person. He's going to be watching these charts, studying this. I even heard him mention, it's getting interesting now. Yep, 20 times earnings for the S&P with ever-improving earnings.
I can't believe this.
Oh, we got these coming through. Let me just mute that.
Energy
Sorry,
Investments
guys.
has become a member. Martyn,
hello.
Are
Sorry
you
about
still
that.
buying XRP?
We'll come back. Am I still buying XRP? I am back in XRP yesterday after a tax-saving operation. I sold all of my crypto and bought it back right away. And guess what? I'm up on it and I've got a 12,000 tax loss, even though I'm back in it where we are. Crypto is actually quite resilient, holding up rather well because the underlying value of the asset hasn't actually changed, has it? I mean, think about it. When you attack oil, when you blow up stuff, when you create havoc, what actually happens to crypto? Nothing. But everything happens to crypto because everyone sells out and gets fearful, over leverages, gets people start shorting the market. So if you're in and you're in an unsustainable way, if you've over leveraged, you get wiped out whether you wanted to leave or not. But the underlying asset hasn't changed. In fact, it's probably the least asset that's affected by any of this, if you think about it. But at the same time, it's the asset most affected because it's volatile and no underlying value. So I am all in on my XRP. I am all in on my Ethereum, and I'm seeing the markets plummet right now. And I cannot wait for Monday morning. Monday morning is my payday. It would actually, it's actually Saturday, but it's been, weekend. I have to wait till Monday, damn it. Anyway, on Monday, I'll be bringing in about $7,000. They will double that with margin. That will give me 14,000, and I will buy the S&P at 7 p.m. on Sunday night because I'll assume the money's in and buy anyway and hope it lands on Monday. Hope Google don't let me down. And they've not let me down so far. So yeah, I'm fully bullish. It's tough. I know it's hard to see your markets go down, your portfolio go down. But if you understand the value and you understand the balance sheet and the underlying principles of what you bought in the first place, I'm not being funny. This is what you want. And whether you hate Trump or like Trump or believe in this, and I don't like wars, and I think the whole thing was unnecessary. It's an absolute master plan to drive the market down when businesses are beating on earnings and we've got the AI explosion with NVIDIA and Google and all these other things. It's going to be a great end to the year, but only if you're in. Will you be in when the dust settles? That is up to you. In 5 minutes, I'll be live with the ECB. I want to catch the tone. Until then, I'm going to hand you back to Sensei. You got a few minutes to take advantage of Sensei's 50% offer. In 5 minutes, he'll end, I'll start, and I'll have a 50%. I think I've got 3. Is that right, Sensei? 3 more on my show?
There's 3 in this one and 3 in the next, so yeah.
All right, there you go. Join me in 5 minutes' time. It's going to be great. Stay in the game. Remember, it's not about how hard you can punch. It's how many punches you can take. That is what Trump does well. He doesn't care. He just does not care. Humanity, is it right? Is it human? Is it decent? Is it good? No, of course it's not. It's bloody awful. But we're not here to have a political argument. We're here as investors to make money so we can provide for our families in the future. Sensei's got a growing family, a newborn on the way, and he wants to make money to pay for his bills. That's it. That's what we're here for. Not to judge, but to invest. That's it from me. I'll hand you back to Sensei. I'm loving it, loving it, loving it. See me in 5 minutes. Sensei, back to you.
Thank you, Martyn. We look forward to your show. Brilliant. So everyone, in 5 minutes' time, Martyn's going to be live with the ECB. So let me finish going through the questions. We've just seen gold and silver correct. I am going to be posting some buys on the portfolio challenge. I am seeing the markets drop, especially in the mining industry, which makes sense. No one could really predict that the war was 100% going to happen. So that's taking a hit. So what we're going to do is probably buy some more there and look at some other opportunities. But again, I don't want to be all in because this could certainly go lower. In my opinion, as you see, you've got different strategies. But at the end of the day, if the market's rallying, obviously you want to be in the market. If you lose it, as Martyn said, there is a risk to being on the side and being out. A few of these questions were about Epstein list. Yes, a lot of people saying this is because Trump doesn't want to talk about the Epstein list. He doesn't want to release the Epstein list, or Israel has something over Trump in the Epstein list, and that's why they're going to war. There's all sorts going on. I mean, it's not really verified. All allies don't want to help us now. So what do you think? I mean, no one really wanted to go to war for this because they didn't see the risk and they didn't see the... so yeah, you're saying no allies want to help because of this. Yeah, they don't want to help because there was no imminent threat reported, because there was a deal on the table. And yeah, they don't really want to go to war, but they are. It is still 12 countries against one at the moment because of they're all involved defensively, and US and Israel are involved in terms of attacking. How can people see normal Iranian people online day after day begging for help and telling you thousands being killed and not want to free them from a tyrannical government? Says David Harris. I'm sure there's a lot of these people that don't want a war either. I mean, blowing up oil fields isn't really helping the people of Iran, I don't think, or bombing residential buildings isn't really helping the people of Iran. Um, what I don't think anyone really has a problem with any with the US bombing the leadership or these people that have killed people, but this war is if it's not helping ordinary people around the world from inflation, imagine the ordinary people in Iran right now who won't be able to be going around their daily businesses, which are getting bombed left, right, and center, and everything's going to become way more hyperinflated than it was before. So I don't really think this was the best solution for that either. Jacko says to the moon. David Hensley says, please hit the like button if you support Sensei. Thank you, David Hensley. Let me go through these comments. 28% tax on metals when you trade, says Matt Grimes. Interesting. Not here in the UK. Do you reckon we were on the precipice of a huge crash in April? I think this year is going to be a down year. I don't know about huge crash specifically in April. I do think we'll have a final capitulation in crypto, whether it's in May, April, May, or October, if we're looking at the 4-year cycle. Two wings of the same problem. This should not be our war, says Robin Jamie. Yeah, a lot of people said if the Iranians want to rise up, they rise up. They don't need help. Raymond Zapta says, lol. Oh, you're saying it's not your war, it's Israel's war. Okay, yeah, a lot of people saying that as well. It's all division. Yeah, oh my God, why is the world just everyone divided? Why can't we just all get along? The Nutella says, how down? Why is everyone selling off? Why is everything selling off? Because every single central bank, which we expected, is very concerned about the inflationary spike this is causing and the escalation by Israel yesterday. The Nutella been by the dip hard since October last year. Hi Sensei, war getting out of hand. Hope your family's okay. Thank you, Crypto the Savage. Appreciate that. Wookie says, how low do you think copper can go? Copper can drop 50%. I mean, copper's a volatile asset and it's been going for a bull run. But the question is, where is it going to be in the future? And is the demand still there? And yes, the demand is still there. Renan says, good morning, everyone. Thomas Moreau says, buys for the portfolio challenge. Yes, I'll be sending out not a full newsletter, but a quick update on some buys. And then we'll be doing some more over the next few weeks, looking at some different sectors, utilities, consumer staples, and then EV tolls. And then once, if we do get a bigger recession or correction or stagflation, then we're going to look at some of these individual AI companies as well. Morning, Martin. High energy investments. Bloody hell. Good morning, indeed. Let me just check this. Martin will be live. Yeah, any second now. Man, if the war ends this weekend, the pump will be in nosebleed levels. Yeah, but there is going to be lasting effects of all of this. But yes, there would certainly be a pump because the market's not expecting. The issue is the most likely scenario is the war doesn't end for another couple months, or at least another month. So the market will rally if the war ends this weekend, but that's not a very likely scenario. Raymond Zapta says, watching tomorrow too. Matt Grimes says, bye, bye, bye. Funny all markets are dropping and that tells you it's rigged, says Matt Grimes. Zion says, time to, I don't know what that says. I know what I hodl, says Matt Grimes. Jacko says XRP went down to 143. Yeah, it's holding up pretty well. The S&P is at the lowest it's been in the last, I don't know, few months, and XRP is not the lowest it's been in the last few months. You would expect XRP to be maybe at 90 cents if it was following it, but we've explained to you, crypto market moves first, stock market moves after, and they don't move exactly with each other. What happened to the 30-40% pullback in September, October? What do you mean? Oh, that was, I don't know. Please ask. I think Martyn spoke about the carry trade and changed his opinion on that to Sean Jun. I think you're talking about the carry trade and the pullback for that. Scottish Pep says, been holding XRP for over 2 years now. Well, Argentina's sending 2 ships. What price do you see silver going down to, Sensei? Oh, it can go down a lot. I mean, it went up fast, so it can come down just as fast. I mean, it can go down all the way down to $50. There is no freedom without fighting. That's how it's always been, says Alpha. To buy QQQ today or wait till weekend. It's 5x leverage. Okay, 5x leverage. That means if the stock drops, then if the stock drops about 18%, because it's not directly 20%, all your money will go. So I wouldn't recommend leverage, and also there's just liquidation spikes. So it's just a bit more. If the QQQ and Nasdaq can drop 20%, yes, so you'll get liquidated if that does happen. Thank you everyone for tuning in. Go over to Martyn now. The ECB. If you stay where you are, you're going to go directly there. If you want to see what buys we're going to be making, literally as this ends, go and sign up to newsletter. It's 50% off. 3 people only will be getting it. So 50% off, and you get all the perks and benefits. The daily newsletter, the deep dive, the charts of the day, the top movers, the one big thing, the money move of the number that matters, the weekly crypto report, the net worth tracker app, the chart training course, the indicator, the Discord integration, the one-on-one DMs, all of that you get 50% off right now. We're celebrating the launch of the training course. Grab it while you can. First link in the description. It's also in the live chat. Until next time, stay where you are. Let me give you Martyn's link, because this is where Martyn is live right now. He's going to be live right now for the ECB rate decision. Here it is. There's live. That's where you're going now. Let's have a quick look at the markets. I don't see Martyn live yet, so let's see what I'm going to be buying. Let me refresh that, make sure. Oh yeah, Martyn is live. Okay. Yeah, there is a few buys we'll make. And also the ISA, guys, if you're in the UK, and I mean, it's very hard to max out the 20k, but tax year end, there's a few things you need to do before tax year end. Make sure you've used a capital gains allowance, make sure you've topped up your ISA. Remember, you can take money back out, you can put it into a cash ISA, you can do things with your pension, you can do, if you're self-employed, all sorts of things. Tax year end in the next couple weeks, so get ready for that. I'm going to be depositing money into the ISA. Until next time, as always, take care of yourselves and each other. The link is pinned to the top. Go and check out the newsletter. Link is in the first link in the description and in the live chat. Go and check out what the ECB says. I think it's the last piece of the puzzle. Take care of yourselves and each other.